Let's go. Welcome back to Won't You Be My Neighbor, the Las Vegas real estate podcast, where we try to make real estate not only informational but fun. As always, I'm joined by my partner, Nika. Show the hot girl. There we go. What's up, Nick? How you doing, girl?
How are ya?
You looking super professional today. I see you out here. I like
St.
the
Patty's Day.
St. Pat. Much respect. I'm gonna get pinched a bunch of times today. No one wants to pinch me anymore. I'm not cute that meaning. So I like the contrast, Nika, between like my Target homeless man chic and your utter like.
It looks very easy. Like that's the easy look where it looks like is he homeless or is he?
No, he just sells beginning RPG character stuff.
Exactly.
Yeah, right. I saw your first dagger in Final Fantasy, right?
Okay, you guys lost me there. You guys are such nerds.
We definitely took that places. Anyways, on the Won't You Be My Neighbor podcast, we try to make real estate informational and fun because I don't think real estate has to be as boring as most people make it, right? You guys need general information and you need it given to you in a way that you both understand and can apply to your own life. So today we are going to take the most boring topic in real estate and we're going to try to make it fun. That is loans and lenders. Everyone loves window shopping on Zillow. Looking at houses. Hell, showing houses. That shit is so much fun, isn't it, Nika?
Right.
Don't you have fun like showing clients houses as they get all excited about the remodel and the new floors and the cabinets, right? Isn't that the most fun part of real estate?
Yes.
Okay. I think she means getting paid is the most fun part. Isn't showing homes the second most fun part of real estate?
You know what's surprising is like the most exciting thing for me is like talking to the other agents and like negotiating.
Ooh.
I did not think that was going to be my favorite part, but that's my favorite part. Because once you've seen a home, I think you've kind of seen, once you've seen like 100 homes, they kind of all look the same.
Really? You've become immune to it?
Yeah.
I'm like a little kid. I still get excited with each home and like why it's built and who it's designed for and who it can fit. I still like, I'm like a kid in a candy store, man, For
me, it's the interactions. It's like interacting with the client and like trying to figure out what they want and, problem solve and then also figuring out how to get a home that they're looking for. That's my favorite part.
We should actually do a class on like from the realtor side on like what we enjoy, negotiations. I think that'd be a fun class, like a whole class on negotiations and how we negotiate, right?
Right, because everybody's different. Every scenario is going to be different. You're never going to get the same one.
Okay. I was not expecting that answer. I like when you catch me off guard. That's why I'm glad we have you here. But today
the homes are cute. You're right. I like the homes.
The way I describe loans and lenders is simple. They are an integral part of the process, but they are the most boring part of the process, right? Everyone likes looking at a $500,000 home. No one wants to know what a $500,000 home is going to cost you. That's not the fun part, right? We like to live in the imaginary place where we just live in the home, right? So what we want to cover today is the importance of lenders and where you get your loan from. Because let's be realistic here. I'm not going to say nobody. Very few people have $500,000 cash to drop on a home. Very few people have $300,000, $250,000, $100,000 cash to drop on a home.
Right.
Which means you're gonna need somebody to loan you the money. And if someone's gonna loan you $300,000, $400,000, they're gonna have some stipulations to it. Right. Like if I called my mom right now, like if I live called her and said, "Mom, I need to borrow $300." She would have at least 17 questions for me as to why I need it. Are you poor? Is it drugs? Are you okay?
Something wrong? Do you need help?
Are you depressed? Like, right? Are you need help? Like she would have 17, and that's over $300.
Yeah.
Someone's gonna loan you $300.
And that's your mom. She knows you. She knows where you live. She knows how to find you.
Right. She gave birth to me, and she's gonna have a bunch of questions. A stranger who doesn't know you is going to loan you $300,000, they're going to have some questions.
Yes.
So today, we're going to provide some answers for you guys. And the first thing we're going to tell you is banks are trashy, lenders are classy. We went from, I'm not going to say trashy. Banks are ashy.
Ashy.
I went from ashy to classy, okay? Banks are ashy. Why? Unless you are wealthy or rich, your bank sees no reason to provide you a better rate or any sort of benefits.
And I don't care if you've been banking with Wells Fargo since you turned 18. They don't care about that unless you have millions and millions of dollars going in and out.
You nailed it. right? Think about if you own your own business. If you own your own business, you don't care if someone's been doing business with you for 15 years, right? If they're buying the minimal amount from you and this guy over here is buying, okay, let's say you own a farm.
Okay.
And you have a guy who's been buying 2 apples from you every week for 20 years. You're
Right.
glad to have his support.
You like his loyalty.
You like his loyalty. But you know who's going to get the best deal from you? Smith's Groceries,
Yeah.
who's buying 20,000 apples a month. You're going to give them a better deal because guess what? They are a fundamental part of your business. I hate to say this, guys. Banks don't care about your money. Your money isn't enough for them to speculate wildly. Your money isn't enough to change that banker's life.
Right.
Okay? The banks care about wealthy or rich people who are doing $1 million loans, $1 million deals, people who are providing them a lot of money. Remember, banks only make money by giving you money and then charging you interest on it. So the more money they give you, the more interest they can make off you. So the banks want to give you money, but they don't want to give it to you at a great rate because they're a bank. This is why we recommend local mortgage lenders. Local mortgage lenders, because they are dependent on you to feed their families.
Right.
It's a huge thing. And I know loans and lenders and banks and money can all seem so wild and complicated, but break it down to the simplest point. Who would you rather work with? Someone who is not dependent on you at all for their success, which means they can cut ties with you at any time. They don't need you. Or would you rather work with someone whose entire ability to feed their family is dependent on giving you what you want?
Right.
Lenders don't get paid. Mortgage lenders don't get paid unless you close on the home.
Another thing to think about with going with like a big bank or a local lender is that if you ever have any questions or you need anything, when you pick up the phone and you call their number, they will answer.
100%.
If you call a bank, you're going to have to go, like
100%.
if press 1 for customer service, press 2. No, you're going to get an actual person that picks up every single time.
Yes. And I'm so glad I have you here. I'm so glad. Communication. I know you guys think of this. Like you guys hear people say like communication is everything. Communication. You guys don't understand because if you've never bought a home, you don't understand the frustration.
It's our lifeline.
Yeah. You don't understand the frustration of the stress that there's a home on the line. There's thousands of dollars on the line and you pick up to call your bank and the person doesn't answer 5 times in a row.
Right.
And you're in there stressing out. You're having an anxiety attack. You're panicking. You're like, oh my God, are we going to get the house? Is everything going wrong? Are we going to get the money? And you're freaking out. And the person who's supposed to make you feel calm isn't answering their phone.
Nope.
You guys don't know that stress. And that is why communication is everything.
Or like everything, I feel like everything always happens on the weekend. Those banks, they're not going to be open on Saturday and Sunday.
Oh yeah. You guys, bad things can happen to your contract on the weekend. Right? Bad things can happen. And if you're working with a bank, they're not answering on the weekend. They work from 9 to 5. Your local mortgage lender works 24 hours a day. I've had one of my lenders answer her phone while she was on a motorcycle drive deep into Pahrump. She's just cruising with the homies on her motorcycle, and she took my call and helped out my client while on her motorcycle driving through Pahrump. Like, this is the dedication local mortgage lenders have. We don't send them to you guys because we make any money. They've actually made it illegal.
We make $0.
I need you guys to know this. After the market crash, it's illegal for lenders and agents to have any sort of financial gain with each other by sending clients. They can't. So for those of you who think that that's a fear for you, oh, he's just sending me a lender to make money. We don't make money off this.
No kickbacks at all.
I'm sending you, no kickbacks. We're sending you lenders because we want to make it easier for us and for you. And by sending you a good lender, we know it's going to be an easy escrow.
And most of the times they're lenders that we have worked with that our clients have loved.
Yes.
And it's tried and true. It's people that we know we can trust.
100%. It's all about trust and communication. The next thing you guys need to know is that local lenders know your local market. I'm going to repeat this again. Local lenders know your local market. They've done enough deals in Summerlin to tell you, hey, this is kind of how houses in Summerlin are priced and this is how things go. Why? Because they're local to Summerlin. They do Summerlin deals. Whereas your bank, A lot of times, the people you're working with at your bank aren't even in Vegas.
No.
They ship out so much work to find the cheapest possible employees that a lot of times, it's like Zillow. Zillow doesn't know shit about the Vegas market. They don't have boots on the ground. Zillow's Zestimate is just guessing. Right? And your bank...
it's always off, usually, by
it's always
at least
off.
7%.
It's always off. It's never correct, right? So yeah, local lenders are where you want to go. They make everything in the escrow, everything in the transaction is so much easier.
Also, if they're in the local market, that means they're in the same time zone, which is very important
That's huge,
too.
right?
Back to communication.
I can tell you a personal story right now. We have an escrow going right now, a contract going right now, where our lender is in Florida and my client is here in Vegas. So they're done working at 5 o'clock.
Yeah.
But for us,
That's like 3, right? Or,
it's 2 o'clock.
yeah.
It's 2 o'clock. So at 2 o'clock, when something goes wrong, we can't reach them because they're done. They're done for the day. Do you know how frustrating that is to have somebody on a different time zone than you?
Yeah. I've been in it. I've been there.
It's frustrating, man. And I know these are things that I'm hoping I'm not adding new fears to you guys, right? But these are just things that you guys need to understand. This is why we recommend the lenders we do. I'm telling you, it just makes it so much easier on you to close an escrow when everyone's on the same page and the same timeline.
And there's a lot of moving parts. Like you would never even imagine how many moving parts are in one real estate transaction. So if one person is screwing up the communication,
oh my God,
it could kill a deal.
Oh my God. Ugh. There's nothing more frustrating than doing everything right on your end.
Right.
And having the deal go sideways because a lender or the other agent or the escrow company or one of the other million moving parts isn't cooperating.
Right.
Because guess what? No one cares. They're just going to blame you.
Yep.
They're just going to blame you.
Because
right?
you're the only one they see.
You're the only one they see.
Like sex is great and all, but have you ever been in a real estate transaction where everything like moved harmoniously? It's amazing.
It is like intercourse, right? Everything is just flowing at the same pace. And then when you close your keys, it's like the huge orgasmic, yay, we did it kind of thing.
Yeah.
And then 5 seconds later, it's right back to the stress.
Yep.
That's the life of a realtor. It's like stress.
So
5
what's the
seconds.
water then that you have to get afterwards?
Oh, don't save that for after dark.
That's you spending your check.
Yeah, that's you spending the
Because
check.
that water doesn't
yeah.
last forever.
Right? Oh man, that's funny. Even before we get our checks, there's still, if escrow wires it to the wrong. I've had escrow wire my company to a company in Arizona. So I had to reach out to HomeSmart Arizona to try to find a check. Don't
And then you have to
started.
wait for it to. I actually had an escrow company try to cut me out of the commission because she was like, "You didn't send me this and this and this." I'm like, "It's a long story, but
I will destroy you.
yeah."
If you cut me out of this, I will destroy you. So what you guys need to know is you, the buyer, your agent, and your lender form a team. We're like a cocoon to help you transform into a beautiful home-owning butterfly, right? We exist to protect you from all the risks that are involved. Remember, this is a contract, which means in the contract, there's a risk you may lose your money, and we are there to protect you. So here's basically how it goes so you guys can get understanding. You call the lender, they approve you for $400,000, okay? And you say, well, at $400,000, what's my mortgage going to be? And we say, oh, I don't know, like $2,600, $2,700.
Which actually, I don't mean to cut you off, but that's the most important thing that you should look at is not how much you can qualify, but how much you can afford to pay per month.
We're putting that on the board. Putting that on the board.
That is so important. People are like, I haven't met with a lender, but my budget is $400,000. No. What can you afford per month?
Yes.
That's what you should be thinking about.
Yes. The mortgage is more important than the list price. I don't want to hear you tell me you can afford a $350,000 home. What does that mean? What's the mortgage on a $350,000? Do you guys understand? Okay, 2 people can buy the same $350,000 home and they're going to get different mortgages. This is one of the hardest things for me to get through to buyers.
Yeah, because it'd be like, my auntie just bought a house for this price and she wasn't paying that per month. Everyone's different.
Baby, your auntie had good credit. Your auntie had a thing called savings.
She had zero debt.
I know. Your auntie had no debt. Your auntie was a financially responsible adult. You like to go to the club every Friday and run your credit card up,
We're
right?
just talking about this.
Okay, you and your auntie are not the same. And this is what it's hard for me to get across to a lot of people, but it's imperative. Two people can buy the same house and get a different mortgage. So the mortgage is more important than the list price, right? The goal for you guys is you want to call your lender, get pre-approved. And then you need to be honest with your lender about how much you can afford.
Yes, please be honest.
Yes.
This is not the place to flex.
Yeah.
Okay.
Yeah. We don't, you guys, when you're buying a house, get your insecurities out the window. None of us are judging you on how much money you have. We don't care. We've worked with people who are buying $100,000 condos. We work with people who are buying $5 million mansions. We don't care.
We're already proud of you that you are investing in yourself and in your own wealth.
100%.
Okay.
We're 100%. The fact that you are doing what 80% of people don't do, and you're actually getting your stuff together and you're becoming financially responsible, we're already proud of you. We really are. We're like, you guys don't know how far realtors are willing to bend over backwards to help you accomplish your goal, right? Me, your lender, and you are a team. And as long as you are honest with me and your lender about how much you can afford, we will make sure that you get there, right? Because if you tell your lender, I can only afford a $2,400 mortgage, guess what he's going to call and tell me? Hey, your client can only afford a $2,400 mortgage. The price needs to be at this, or you need to negotiate this much off the list price, or you need to get this much in closing costs to buy down the rate, right? Your lender will tell me that directly.
Yeah.
They'll tell me, hey, Brandon, if you get this home for $360,000 and they give us $10,000 in closing costs, it'll make it a $2,400 mortgage.
Right.
Great. Now, you guys think writing a contract is like this magical thing where we just negotiate. No, we write the contract based on what you can afford.
Yeah. And this is where the whole teamwork comes in. Like
Yeah.
you tell the lender conveys it to us. We go out, we find the deal. You know, it's just
100%.
Don't lie. Please don't lie.
Please don't lie. One of the worst things you guys can do is waste your own time looking at houses you can't afford. Oh, this $400,000 house is completely remodeled and it's beautiful. Okay, well, they've got 5 offers on that house and they're not going to offer closing costs and your mortgage is $2,900.
Yeah.
Well, we can't afford that. Then we're not looking at that goddamn house.
Right.
You can't
And also,
afford it.
Even if you can afford it, like, are you going to be comfortable? Think about stuff like that, you
Yeah.
know?
Yeah.
Like, are you going to be able to, I don't know, if you help your family out, are you still going to be able to help them? That's
Yep.
things that you have to think about and be real honest with
100%.
yourself.
You don't want to be house poor. And we don't want you to be house poor.
No, that's the last thing we want. We don't want to put you in a house and then you can't afford it.
The first thing I tell every client, will you be able to buy this house and still live the life that you want? Right?
Right.
If you're now
Sacrifices are going to have to be made.
Yes. Yes, thank you for throwing that in there because there's a huge but there. When you go from renting to owning a home, your lifestyle has to change. Why? Because you've just gone from a peasant to a lord. You can't live like a peasant anymore. Peasants get to live carefree. They got no responsibilities. All they got to do is make sure that they're paying the Lord, and that's it, right? Once you become a lord, you own the home. You now have a responsibility to yourself and to your family and whoever's counting on you to maintain your lordship, right? Your life has officially changed when you own a home. So you can't live the same way, but on the same thing, we don't want you in a house so expensive you can't take your kids out to the movies from time to time, or you can't go to a basketball game or do something fun with your family. We still want you to be able to, exist in the same realm of life that you were living before, just, tone down a little bit.
Right.
So,
agree.
so now that we got that out of the way, let's get to the part that we can get a little bit more exciting, and that is the major loans. Your 3 major loans are going to be FHA loans, conventional loans, and VA loans. Out of all the loans, we deal with these 3 loans, I would say, 95, 96% of the time. There are things like jumbo loans. There are some other type of creative financing, but typically, most of you watching this are going to get FHA loans, conventional loans, or VA loans, right? So it's good to stick with the big 3, and let's go over each one individually. Now, In the future, we are going to have entire episodes dedicated.
Like one for FHA, one for
Yes.
conventional. Yeah, because there's
Yes.
a lot.
There's a lot
There's
to
a
cover
lot.
with each. Today, we are going to cover the ground basis of pros and cons of each loan. And we're going to keep it really simple. We're just going to do pros and cons of the major loans. Okay? So with FHA, Nika, let's go over some of the obvious pros of the FHA loan. Some of the obvious pros of the FHA loan, right?
You can have a lower credit score.
Lower credit requirements. So, in fact, let's put it on the board. Let's put it on the board. You can have a 580 credit score and still qualify for the FHA loan.
Right.
Okay. Now,
A lot of people still think you need to have like 800 to buy a house.
I do have a question though, because when I was trying to start this process, the lender, I mean, that was a few years ago. The lender was telling me they had their own requirements. So that's just what you like. The government makes you
yes.
like be willing to take, but the lender was like, no, we want you to have a 640 before we.
The lender, what the lender wants and what the government requires are two different things. Lenders want it easy, just like the rest of us. And when you have a 640 credit score, it makes it easier on them to pass you through qualifications. They don't have to worry about underwriting, kicking it back. Because you guys got to remember this. Again, we don't want to go too deep. We don't want to go too deep into the lending stuff and talk about underwriting. But ever since the real estate crash, they have put so much risk protection on loans. So the lender isn't even the final say on you getting a loan. They have to send your loan to something called an underwriter, who literally is making sure that the lender is not sending some bullshit client into a mortgage they can't afford.
Yeah, they're checking your job.
Yep.
They're making sure you actually work there. That's how much money you actually make. They're checking all of that.
Yep. If you've ever been worried about a real estate crash, please understand the lengths that they have taken to make sure that anybody buying a home can't afford it.
I was just going to say that it's not the same as it was
Yeah.
back in 2008.
So a lender can, serious. This is why I tell people to shop their loans with different lenders. Because some lender can say, I'm not willing to take the risk of a 580 credit score. I know the government allows it, but I'm not willing to take the risk personally. That's okay.
That's okay. We'll go somewhere else.
Shop your loan with somebody else. I will also tell you, if you have a 580 credit score, I won't work with you. I won't work with you. And it's not anything about me personally, right? It's I have to protect my clients. And if you have a 580 credit score, you're going to get the worst rate humanly possible. And I can't send you into that.
And yeah, you do, like you guys said, you don't want that for people.
I don't.
Well, and that's what we were talking about, how you can have the same house and your mortgage payment would be different.
Yep. Do you want a $3,000 mortgage when other people have a $2,500 mortgage? Yeah. Then go in with a 580 credit score. You guys should never be aiming for the minimum in any aspect of life. I don't care if it's real estate, dating, or a job. Never aim for the minimum requirements. That's not a way to live a happy, healthy life. Okay. So lower credit requirements. The next big obvious one, and I kind of stumbled on it already, 3.5% down payment.
Yes. We always talk about this.
No, but what the hell does a honestly, to the average person, what does a 3.5% down payment mean? So I have a fun little game where I show people what 3.5% is to things that they like. So if you like Chanel bags, what's the cost of the average Chanel bag? Do you know?
It's like probably like $5,000 to $8,000.
Let's call it $5,000. Okay. You want a Chanel bag for $5,000. If you could get a 3.5% down payment on a Chanel bag,
I'm buying it.
it would cost $175.
I'm getting 5.
Did you?
Now your house broke.
I know exactly.
If Chanel bags were $175, they would sell those things at Costco.
Yeah.
They
And I
would
would buy
sell
'em in
Chanel
bulk.
bags. Well, no, then girls wouldn't buy them anymore because we'll save that for after dark.
Right. Okay.
We'll save that for after dark. If you wanted a Chanel bag on a 3.5% down payment, you could get it for $175. What about for guys? Guys, you want a new speed?
PS5s, right?
No, you want a boat. You want a boat.
I thought
you want a boat?
PS5s were like $5,000.
No, PS5s are like
The guy you met in the parking lot that was trying to sell one had it for
I don't
$5,000.
know. Let's say you wanted a boat for $100,000. Okay, let's say you wanted a boat for $100,000. Imagine you could get a boat for $3,500 Imagine you could get a boat. If boats were $3,500, Lake Mead would be flooded. Dudes would never be on land ever again if boats were $3,500. Because me and a friend could be like, I got $1,750. I got $1,750. Guess we got a boat now, right?
Right.
This is how low 3.5% is. People need to understand, when you go to most countries around the world, you can't get a house for 3% down.
Yeah.
That's insane. This is why around the world you have so much homelessness, why you have so many people renting for generations. Because owning a home is hard. But here in America, you can get it for 3.5% down.
Do 3.5 on like 350 or 400, which is...
Well, let me show you guys. So a house cost $300,000. 3.5% of that is $10,500. Do you guys understand? For $10,000, you can live in a $300,000 home. And this is where I get in trouble.
Oh.
This is where I get in trouble. There's people out there who go, oh, only a $300,000 home.
It's like, bro, what are you living right now?
Bro, like, the rest of the world would kill to have a $300,000 condo or townhome or starter home that has air conditioning and is safe from the outside world, and it has its own bedrooms and its own water in a city.
That is super. There's so many things to do out here.
Yeah.
Like great food.
Yeah.
I mean, 300,000 in a little rural area, I could see, but this is Vegas, man. This is like big city, but
yeah. I know you guys didn't ask for this real estate tip, but I'm going to give it to you all the same. A lot of times it's not the money keeping you guys down. It's your arrogance. It's that you think with no credit history or no housing history, you deserve the $600,000 remodeled palace. You think you deserve that. For what? What makes you think that you deserve that? That you're just owed that? Your grandparents maybe built their own house, or maybe lived in a shitty apartment in an overcrowded city, and they worked their way to owning a home. And for some reason, our generation thinks that they just deserve a 4-bedroom remodeled flat in a gated neighborhood.
that's the thing is like when you're buying your first house, just keep in mind this is not going to be your forever home, but this is going to be a way to build wealth. This is how you start. You have to start somewhere.
Yes.
You're not going to get a new build for $1 million.
Yes. The final perk of the FHA loan is it allows you to have a higher debt to income ratio. If you guys have watched any of our podcasts, we tell you buying a home isn't about how much money you make. It's about how much money you keep in your pocket. And a lot of you people have debt eating away at the money you make. Well, guess what? With the FHA loan, you can have, in some cases, up to 50% debt, which means if you make $5,000 a month, they will allow you to have $2,500 worth of debt. That is a lot of debt.
It is.
Most people right now, you guys are probably sitting on like 40 to 45% debt.
Yeah.
Some of you are even sitting on like 30 to 35%, right? If you're allowed up to 50% debt, what you guys are seeing right here, low credit requirements, low down payment, low or high debt to income ratio, basically states almost anybody can qualify for this loan. Honestly, this is why immigrants who come to America are shocked about how easy it is to get a home out here. That is one of the most shocking things to them. Out of all of our behaviors and all of the gifts that we have, how easy it is to get a home out here is shocking to them. It really is. What you're seeing here is almost anybody can get a home in America if you just put a little bit of effort in. Okay? What are the cons to the FHA loan? We have to talk about these. Okay? The first and most obvious con is mortgage
PMI.
insurance premium. It's not PMI, it's MIP.
MIP.
See, PMI is private. We'll talk about that with conventional.
Oh, okay.
Private mortgage insurance is what happens when you put down less than 20%.
Oh, gotcha. Okay.
But remember, this is the U.S. government giving you this loan, which means they are looking for any way to screw you out of your money. Why? Because they didn't teach you any financial literacy. So screwing you out of your money is easy. It's like literally taking candy from a baby. No one's taught this baby how to fight.
And now this baby's a grown up.
Yeah. Yeah. So mortgage insurance premium is a levy against your loan that is permanent. Okay? Permanent. You cannot get rid of mortgage insurance premium on an FHA loan. The only way to eliminate it is to refinance. Which means as long as you have your FHA loan, you are going to be paying the premium. Now, I must tell you, the U.S. government finally did something good, and they dropped the percentage on the premium. They dropped it from, I think, 0.81 to 0.51. I'll have to double check that. If you have time, do you have Google up?
I do.
Could you just check the new insurance rate? I just want to fact check myself while we're live right now, okay? But regardless, you will be paying this mortgage insurance premium permanently as long as you have a loan. Another con, and you guys have to know this, is FHA loans have housing limits. So in Nevada, specifically Clark County, so Las Vegas, 0.55.
So it was 0.85. Like
so they dropped it 0.3%, which is really good. It saves you a lot of money. In Nevada or in Las Vegas, you are allowed to buy a house up to $495,000.
Which they just raised.
Again?
No, that they raised it to $490. Yeah,
it was $420. They raised it to $495. Okay, so in Las Vegas, in Clark County, you were allowed to have a $495,000 loan. Does this make sense to everybody? Good. I hope it does. In San Francisco, the FHA loan is up to like $900,000. It's based on how much money people are making around you, but it does have loan limits. You cannot use the FHA loan on $1 million home. All right. And then the next thing you guys have to know is condos and townhomes are really tough to buy with FHA loans.
Can you explain that too? Because that was my last deal, and I was a little shocked at that.
So I've had so many deals fall through because of this. Condos and townhomes are owned by a cooperative, especially condos. Mm-hmm. They're owned by a cooperative, right? And that cooperative wants to make sure that they own a majority of the homes. Well, FHA loans and VA loans are government-owned loans. So if everybody on an FHA loan defaults, who owns the homes? The government. Right? So because of that, they want to limit how many government-owned homes are allowed in each condo association. Right? So once they hit that limit, let's say there's 100 homes and they only want 25 of them to be FHA loans. Once they hit that 25 loan limit, that's it. Yeah. Done. And the reason it can be complicated is because let's say there's a home up for an FHA loan. Let's say there's one more spot. And while you're under contract, somebody comes in and buys a home under an FHA loan. Well, boom, they've reached their maximum and you're instantly cut off.
And then it falls apart.
Yeah. And there's nothing you can do about it. I've had clients lose money this way. And so I always tell people, before you use your FHA loan on a condo or a townhome, do your research with your lender and make sure that it qualifies by a wide amount for that condo or townhome, right? All right. FHA loan down. We're going to move on to conventional. Conventional is your traditional loan based off of your credit score, debt to income, and personal finances. The conventional loan is a traditional loan, you guys. It's a traditional loan. You have this much money. You make this much money. You have this much debt. Here's how much money we are willing to loan you. Okay? Now, here's some pros to the conventional loan. If you're a first-time buyer, you can get 3% down payment. Yeah, this is the biggest pro of the conventional loan. If you're a first-time home buyer.
Which means that you haven't purchased a house in 6 years.
3 now.
Oh, it's 3.
In Las Vegas, it's 3 years.
Oh, nice. Okay. When I took my test, it was 6, but yeah, 3.
In Las Vegas, it's now 3 years. So if you have not been on the deed of a home in Las Vegas for 3 years, you are considered a first-time home buyer in Las Vegas.
Even if you bought a home before.
So let's say you bought a home in 2010, you sold it, and you've been renting for the past 10 years.
First-time home buyer.
You are a first-time home buyer.
Okay, so like, let's just say, for example, my dad right now is still paying a mortgage on a house he bought over 10 years ago.
Yep.
He doesn't qualify as a first-time home buyer. He does not. Because he's on the deed of the house.
His name is on the deed of the house.
Okay, because see, I thought it was just as long as you haven't purchased a house in the last year.
Nope, you cannot be on the deed of a home. Now, I'm going to get in trouble for this one. There's some obvious tricks to this. let's say you and your wife are married, but you're the only person on the deed for the home, right? Let's say you bought the home before you got married. So she lives in the home, but she's not on the deed. She is technically a first-time home buyer. Her name is not on any deed anywhere. I know, no, I'm not going to rat on nobody. Let's just say hypothetically, I've known couples who have gotten a divorce, quote unquote. They've gotten a divorce, quote unquote, and one of the persons bought a home, and then, they magically worked things out.
Good for them. I'm so happy they worked it out.
They worked things out and were re-engaged that year.
With 2 houses?
And now they own 2 homes. Now, obviously, there's some loopholes here because an FHA home has to be your primary residence,
yes,
right? But let's just say if you have a good team around you, all things are possible in real estate. All things are possible. So, okay, now I don't want to get anybody housing fraud, so we're going to move on. That was a quick little aside. All right. So if you're a first-time buyer, you can get 3% down payment. Another good thing about conventional loans is you get to decide your mortgage. This has to be the best part of a conventional loan, right? Because on a conventional loan, if you want to put 3% down, you can put 3% down. If you want to put 40% down, you can put 40% down. You can tell your lender what you want your mortgage to be. And your lender can say, okay, well, if you put down 15%, your mortgage will be that. And you can put down 15%. If you want to put down 18%, 23%, it does not matter. You get to decide what you want your mortgage to be. And that is the beauty of the conventional loan.
Yeah,
now,
you've got more freedom with that.
It is. Now, conventional loans allow you to borrow more money, but they also have a cap, right? Because there's a thing called a jumbo loan. If you're trying to borrow $2 million, it's a jumbo loan, right? No conventional lender is just going to lend you $2 million on a normal conventional loan. You have to take out what's called a jumbo loan. But conventional loan limits are higher than FHA loan limits. So there's a value there. So these are the 2 big pros. You get more freedom in choosing where you want to live. This is a reason a lot of people choose conventional loans, right? Because when you have your own loan and you're not dictated by a down payment or a housing price, you get to choose. With an FHA loan, you're most likely not living in West Summerlin. You're most likely not living in Anthem, right? Because the houses in those areas are above the loan limits.
Actually, we just found one that was a little bit under. But yeah, you're right.
In West Summerlin?
We're not arguing Summerlin versus the box anymore. That was last week.
The point is,
yes,
with an FHA loan, you're I wouldn't say limited, but you're restricted to certain areas of your city based on what you can afford.
Right.
Whereas conventional loans, you have more, right? So, Nika, what are some of the cons? Like, the pros sound amazing, right? You can buy wherever you want. You can put down as much as you want. You get to decide your mortgage. What are some of the pros or some of the cons?
You gotta have that A1 credit. The higher credit
and
requirements.
Credit requirements much higher. Okay. So if you guys are going to get a conventional loan, typically they're going to want a 640 plus credit. I say typically because all lenders are different. Mm-hmm. Some lenders might take you in at 620. Most lenders are going to want a 640 credit and 41% debt to income ratio.
That has been like the most important thing for us. They were like, it's the most important thing is the debt to income.
The debt to income.
Yeah.
Dude, I tell people all the time, you could have a guy making $100,000 a year. Mm-hmm. And if he spends 80,000 of it, he ain't getting shit.
No.
It's about your debt to income ratio. It's not about how much you make. It's about how much you save. That should be a slogan. Austin, when we do the podcast, it should pop up like Mr. Rogers or like Reading Rainbow. It's not about how much you make, and then I wave my hand, and it'll be like, it's how much you save.
It sparkles and does all the sound effects.
Yeah, Reading Rainbow, right?
All that. In the sky.
Girl, you're about to get this copyright infringement. You better stop. You better stop.
Well, we were just talking about that. We live in like a spending culture, where it's like the biggest flex is to spend all your money and buy all the fancy stuff.
It's
really not. You
that's
guys.
That's for ugly. Well, I don't want to call ugly people.
Oh,
that's
no.
for people who don't. That's for people who are not marriage material. People who are not long-term material. Like, if I meet somebody, I'm not single, right? But if I was single nowadays and I met somebody out and they had nice Gucci shoes and a Gucci purse, and I'm like, oh man, that's a really nice purse. How much you get it for? Oh, this much. Oh, great. Where do you own a home? Oh, I don't. I rent in these apartments. But you have a down payment on your arm? All right, great. Now I know that you are not someone that I want to be engaged with long term, right? Because I'm too old to teach you financial responsibility, right? At this point in my life, I don't have it in me.
I know, but it's not their fault. I mean, they really don't teach it. I think you just...
It's not their fault. Whose fault is it? Who is supposed to be responsible for your bad decisions?
Some people just never learn, you know?
That sounds like it should be their fault, right? Like if you're 17 years old and you're making irresponsible financial
or 21
decisions,
or 22. Yeah, we get it. We all made...
Or 21 or 20. Goddamn.
You didn't make bad decisions when you were 21, 22?
I did.
Financial decisions?
But they were my fault. No one felt pity for me. They were like, hey, it sucks for you.
Nobody said anything. You just didn't have any money. you
Yeah,
know?
I was just broke.
That's how you learn.
Yeah, no girl was like, oh, it's okay, Brandon. I know you're broke, but I'm going to love you anyways because I know it's not your fault. It didn't work
Hey,
that
I know
way.
some girls that would.
I can fix him.
I can fix him. Nah. I wasn't handsome and buff enough for that kind of shit. No one was trying to fix my ass. I wouldn't go down like that. All right? That shit works for y'all. Y'all can be broke throughout your whole 20s, and some dude will be like, I'm cool with it. We're good. So the final one we want to go over, because honestly, with the conventional loan, there's not too many cons to it. It has a higher debt to credit standard, but that's really it, right? Like the con is that you got to work harder to get it.
Right.
But once you get it, there's not really any cons. You get to dictate your mortgage. You get to dictate the price of your home. You get to dictate what you want, right? So there's not too many cons. Unlike the FHA loan where we kind of have to go over a lot of things, the conventional loan doesn't need much explaining. Can you afford it? Yes. Great. It's a fantastic loan, right?
But the good thing about it, go ahead.
No,
I was going to say, the good thing about it is you don't always have to start off with a conventional loan.
Sure.
You know, if you don't qualify for a conventional, no problem. Do the FHA. And like he was saying, to refi.
Yep. We're not going to get into that this class, though, because like we said, we're going to do an entire class on the FHA loan because I could go for 3 hours on the FHA loan.
Right. But just don't be afraid. Don't be like, we need the conventional. We can't do the FHA because no.
You guys, here, let me just show you real quick. Here is the ranking for loans, okay? I want you guys to understand because a lot of you guys, when I tell you that the FHA loan has some cons, you guys think that means bad. Let me show you the ranking. Okay, ranking for home ownership, okay? VA loans are the best. Conventional loans are the next best. FHA loans are like down here. And guess what, guys? Guess what? I'm going to keep going. Renting is down here. Okay. So FHA loans may not be the best, but they're this much better than renting. Okay.
Right.
Like
no matter what loan you have, you're still going to own your house.
Yes.
There's no bigger flex.
Yes. It is better to have an FHA loan and have a subpar mortgage for a year or two and then refinance it rather than rent for a year or two and then try to save money to get a conventional loan.
Right.
You're throwing so much money and equity away by doing it that way. It doesn't even make sense. All right. The final one is VA loans. And we're going to run through this one because it's really easy. For veterans or current employment or deployment in the U.S. military. Pretty simple. I think you have to be active for 90 days or reserve for 180 days. Now, you have to double check me on that one because it's been a while since I've checked the VA loan requirements. But I believe it's active for 90 days and you reserve for 180 days, right? So this loan is for veterans or current employment in the U.S. military, right? Pretty simple. To qualify for this loan, you must give the U.S. military your time and service. There you go. I guess that's the first con, right? Okay. I guess we should start with the cons. No, the pros here. No.
At least 90 continuous days.
There you go.
All at once without break in service.
So 90 continuous days of deployment 180 days in active reserves. So there you go. The pros are no down payment. You guys have heard this. Most of you guys know this. A VA loan comes with no down payment. That's right. You could find if you qualify for $1 million home as a veteran, they will give you that home with 0 down payment. That is insane. But guess what? If you're a veteran of the U.S. military, you've earned it. I tell every veteran I meet, please use your VA loan. You have given your time, your service, your body, your life, your dedication to the U.S. military. You deserve to get this loan with no down payment. Okay, you earn it. This is also why we don't discuss the USDA loan here. Veterans have to give their lives and their service to get no down payment. What are you getting to get a 0 down payment loan? Ask yourself that. If veterans have to give their lives to get a 0 down payment loan, what are you giving to get a 0 down payment loan, right? That's why I don't recommend them. So the pros are no down payment. Can be used by your spouse if something happens to the veteran. Now, your kids can't use it. Your grandkids can't use it. But if something happens to you, your spouse can use your VA loan. We don't want things to happen to you, obviously, but we have to be realistic. If you're a member of the U.S. military, right, you are putting your life on the line for the rest of us.
See, and that's another reason why they have no down payment. Like,
yeah,
all of that risk.
Yeah.
So is the play to be a veteran, be married, and then get divorced, get the FHA? Now you have 2 houses. One of them you didn't pay anything for.
I mean, you try to get me to commit housing fraud on camera, aren't you? You're trying to get me to commit housing fraud.
I was looking at you like, is he going to say it?
I am going to say that there are many loopholes in the real estate system as long as you don't get caught.
Austin is spicy today.
He is spicy today.
Spicy.
So the pros are no down payment, can be used by your spouse if something happens to the veteran, right? The cons are you have to dedicate at least 4 years. Well, not these 4. You have to dedicate your time and service to get the loan. I'm not saying this is a con,
Yeah,
right?
we're just saying it's
I'm just saying, like,
stipulation.
you don't get this loan without giving your time, service, duty to the U.S. military, right? That's
so somebody brought up something really good in the comments about how why would you want 0 down payment because your mortgage would be high. So could you, if you're using your VA loan, could you pay down
sure
your interest to get a
why
better
would
mortgage?
why would you want it? Well, okay. There's a lot of so here
They're just saying in the sense of it would be a high mortgage because you would have 0 down payment.
it's not actually a higher mortgage. The VA loan gets a sub. Okay, you guys don't know this. VA loans get better rates.
Yeah, lower.
In fact, in Nevada, we have something called Home is Possible Heroes, where if you're a veteran, we take whatever the current interest rate is and we give you a rate below that. That's it. We just give you a better rate. So VA loans get better rates, right? So think about this. There's a lot of people that can afford, let's say the house was $600,000. There's a lot of people, I know this sounds crazy, there's a lot of people who could afford a $4,000 a month mortgage. A lot of people can't come up with $60,000 all at once.
Yeah.
There's a difference. There's a difference. When I was growing up, there was a point when my mom had 2 jobs. There's a point when my mom had 2 jobs, right? At one point, I think she had like 3 jobs. She could have afforded a $3,000 a month payment, but she couldn't come up with $50,000 to $60,000 all at once. That's impossible for her.
Yeah.
That would be impossible. That's why the VA loan is so great. You know, you get out of the military, you may have a job, you may be going to college, but you want a home, you don't want to rent. Well, you get enough of a stipend they give you enough money to like pay for your rent or whatever. Well, if you can find a house that covers that, great. You can buy a house instead of renting. You don't have enough. You're fresh out of the military. You may not have $60,000 as a 22, 23, 24-year-old person, but you can afford a monthly payment. And that's why the VA loan is so valuable. That's why it's so valuable. A lot of people can afford the mortgage. They can't afford the down payment. All right. So the cons are, must give service. And another con is must pay VA funding cost. Just because you don't have a down payment, you still have to pay a funding cost to the VA. Trust me, you guys, The military, the government is making their money off everybody. So the down payment is free, but you still need to pay the VA. Now, there's a trade-off to this. 100% disabled veteran doesn't need to pay. That's not a con. We're just going to add that as like an addendum, like a little add-on here. So if you are 100% disabled veteran, you do not need to pay your VA funding cost, right? There we go. I don't think we missed anything. I think we hit every single thing today. I think this was the first one where I said, I'm going to come in. I said, I want to make sure we can have fun, but I want to stick on topic and at least get the fundamental bases for each loan. And I think we hit that, right? We explained that FHA loans have an incredibly easy entry, but they have the most cons, right? The easier the loan to achieve, the more con. Like, think about it. The easier it is to pick up someone from the bar,
I knew you were gonna go there.
the more
Problems you think you're gonna have.
the more baggage that person has, right? Or if they didn't have that much baggage, why would they make it so easy for you?
Okay.
Think about the FHA loan as like air mattress Ashley. She's easy. She's easy to take home, but there's a bunch of cons that come with the ease of entry.
Okay.
Right? And then the VA loan is like, oh man, you got to put in years of time to get that no down payment loan, right? You got to really put in the effort. And then the conventional loan, just like the average, high quality woman. You got to
2 or 3 dates, you think?
Yeah,
Or
you
more
got
than
to
that?
take her on some dates. You got to have a decent car. You got to have a decent job, right? I'm not saying you got to drive a Lexus, but you got to at least be driving like a Honda Accord or something like that, right? Like a Toyota Accord or something like that. You got to at least have a family-friendly sedan.
Yeah.
Right? You got to have some sort of qualifications, right? I think that's the easiest
Like
way
not
to
a
put
Kia.
it.
You're saying they can't be driving no Kia.
I mean, a Kia could be no. Don't
Be out here driving a Camaro, doing burnouts in the parking lot, and being like, "I'm a family man."
You just can't drive a RAV4. Is basically it. You can't be driving.
That's Toyota. Well, you don't like RAV4s?
You're fucking up my analogy, girl.
Now we're getting too technical.
Yeah. Anyways, you guys, thank you for your time as always. I hope we taught you something today about lenders and loans. My name is Brandon from Vegas. This is Nika. Nika, tell them how they can find you on Instagram.
My handle is Vegas Realtor Nika. Super simple.
Vegas Realtor Nika, you guys. We will see you guys next week. And as always, won't you be my neighbor? All right, those of you watching on TikTok, because remember, on YouTube, remember, guys, I'm going to give one of you guys $40. Austin.
Yes, sir.
Can you pick one random person from the TikTok, from the YouTube live? Austin is going to pick one random person, and I'm going to be sending you $40. You must have Apple Pay or Zelle. One of the two. Apple Pay or Zelle.
How do I even pick somebody randomly?
Pick somebody randomly. You don't know any of these people.
No, I don't.
Just pick a name. Pick someone who's been really active throughout the show.
Oh, so then that's one person by far, and that's New York Tess.
New York Tess? Is that Mike Tess?
They're doing it.
It sounds like someone's dying in the next room. All right, guys, we are going to do a real talk segment. We're going to do a real talk segment right now. Oh, man.
I'm freezing in here. Are you cold?
I'm never cold.
I gotta send this real quick.
Is someone at the show coming in?
Yeah, Christina.
Oh, it's okay.
Hey girl, I'm not sure if you got my message.
It's
But I'm
okay.
still here.
5 minutes.
We can no, it's okay. We can do after dark next week. It's okay. It's okay. I didn't realize we had gone. I didn't realize how long we had gone. We can do after dark next
Hey
week.
girl,
It's okay.
so I don't know.
All right, say bye to everybody.
Wait, shit.
We gotta give them $40. Somebody has to win $40.
Okay, New York Tess.
If I promise them $40, they have to get $40.
That's why I don't make promises.
Ah!
I guess New York Tess reach out to Brandon on Instagram.
Hey girl, so I'm still at
Yeah.
the studio. I don't know
Let's
if you
see.
got my message, but I'm gonna have to reschedule. Sorry.
Let's see. You on test? Oh, what? Teach you guys are paying us? I thought it was a dog. Wait, New York, where's he at?
I don't know. We said it. We're
I
still
gotta give somebody $40. New York Tess. I need his actual name.
I guess we'll give him a minute to claim it. If not, then we'll move on to the next person.
Yeah. Is this the second? No, this is like the 5th Won't You Be My Neighbor podcast.
Are we still live?
Yep.
Oh. What are we doing?
Trying to find somebody to give away with.
I need someone to do a giveaway with.
Teaching us.
I said New York Tess because they've been the most active, but they're
How about this? The New York Test is gone. How about Joanna Campos? Joanna, can you hear me? Joanna, can you hear me and or see me?
Oh, it's still on me.
That's the old video.
Yeah, it's catching up. So.
Joanna, can you hear and or see me?
Aaron Nelson, Mika's killing the podcast. Aw, that's so nice. That's probably my mom.
I'm trying to give someone money. They're making it so hard for me to give them money. Why do they make it so hard? I want to give somebody money.
Wait, who wants money?
What do you mean?
I told
everybody
everybody.
wants money.
Oh, people are saying hi to me. Hi, guys.
Oh, I watched them live, but you didn't post it? Yeah, no, they're all up on YouTube. All of our podcasts are
Yeah.
on YouTube, guys.
Yeah, they're going up.
All of our podcasts are on YouTube.
I've been doing like a weekly turnaround on them so we can get.
How do they win?
Well, typically, I just pick somebody randomly and I send them
Oh.
money through Apple Pay or Zelle, but they're trying to give up $40. I'm literally trying to give money away, but the people I'm asking aren't responding.
I'll just take it.
New York,
I'll just take it then.
New York Tess, didn't he left? I don't know if that's Mike. If that's Mike Tess, I ain't giving Mike Tess money because Mike Tess is working with one of my guys in Florida.
He got money.
Yeah,
I lied. You guys are good until 11 or until 12. And then.
Well, we're already wrapping. So.
yeah, we're rapping. We're rapping. I'll make it easy. I'll make it easy.
Was it a good stream?
It was a pretty good stream. We went longer than we typically go 30 minutes, and we went like 53 minutes. So
Oh, that's good.
no,
Well, I think it was kind of like real estate after dark, like together.
I know. We gotta. We're
It's
gonna
a start, so
yeah.
you just look at it like that.
Yeah.
Stop beating yourself up.
I think Colin's trying to say give him the money.
Colin. Let's see. Colin's been pretty active, isn't he?
Yeah, since for what? Like the last like 5 minutes.
All right. Colin's been active. All right, Colin. I need your. How do we do this? Because typically on live, I just have someone give me their phone number or text me. Is there a way to put my number in the chat?
I mean, yeah, but you don't want everybody
Oh,
wanting your.
There's only 70 people in here. We're good. We're safe. Is that a usual live?
yeah,
line?
okay, yeah, we can put it in there.
Where do you see the number of people? Oh, right there.
All right, Colin. Text me your number. I'm gonna put my number in the chat right now. Colin, text me your number.
What's the number?
702 417
Somebody said, oh, I said
7305.
730
Yep, Colin, send me a text right now.
All right, say peace to everybody.
Bye.
Adios. Colin, send me a text right now.
Okay, I'll take it. Okay, Colin's got it. We got a winner.
Colin, you better have Apple Pay because I'm lazy.
I see you got the fresh cut.
If I have to open up any sort of apps, I'm over it.